All right, guys, welcome to our presentation on the Phoenix market. As you guys know, we've been diving into different markets across the country just to kind of look at what MSAs are growing, why, and what are the good things about them that we can kind of derive from a investor standpoint, from a marketing standpoint, as far as what's going on in certain areas. So we can definitely see where that's going to go, how that's going to go, and who's showing up. Because if you guys will remember on our Houston presentation, this was probably 6 months ago, we made some pretty clear determinations on what the town was providing stability and income for, what it really said it needed based on the dollars and cents that were being spent on employment, on infrastructure and things like that. So today's going to be a lot the same. It's just a different market. We're going to be looking at the Phoenix market today. And so we're going to jump right into that. Phoenix is about, it's about an hour and a half plane ride from Boise, Idaho. Nice and close, a lot of snowbirds in there. But we want to look at the reasons on why we look at markets, right? So there's a consistent housing market. There are 100,000 students in the different colleges in the Phoenix area, and it is the most populous state capital with 1.6 million residents. It is also one of the country's largest tourist markets, 10 Fortune 500 companies, and major tech growth. There's a lot of investment being done in the tech market in Phoenix right now. And it's also, oddly enough, a trucking hub for manufacturers. And we'll get into that a little bit more about why that's happening here in just a little bit. But for starters, we want to look at all of these things and continue to figure out why Phoenix is such a great market. So we're going to do that for the next little bit. So bear with us and we'll get this party started the right way and go from there. So when we're looking at why Phoenix, it's the state capital with the highest population, including the greater metro area, which is Phoenix, Mesa, Chandler. It's got 5 million residents in the MSA. That is a pretty substantial amount. That's larger than Houston. It's larger than Dallas as far as a city goes, but this is the MSA, and it's a growing population all the time. And that is also something that we really look for in investment markets, is to make sure that, well, we like to see markets that are continuing to grow. So the personal income is fairly high in Phoenix, and it continues to grow. They're projecting that it will grow at more than 5% annually over the next several years. And the reason for that is not necessarily because of the job growth, job creation in there, which we will also show is also growing, but it has to do with retirees. As you guys know, the silver tsunami is underway. The largest generation in history is retiring. And in that retirement, they are picking a climate that is warm. A lot of them, like my parents, love their home state, love certain aspects of it, don't like certain aspects of it. And so they're utilizing the beautiful market of Phoenix to move themselves into, to take the time to have very mild winters, very dry climate. So there's not a lot of humidity. And as you guys know, when you add heat and humidity, you get some pretty funky stuff. But they're also looking at very high retail sales. You know, we had an 11.5% jump in retail sales in 2022. Of course, some of that came from COVID. We were coming off the COVID lockdowns, and this is one of the few that didn't lock down very hard. Few states that did that. And so they had a very vibrant economy. But then once the rest of everybody got out of quarantine, they decided they want to buy more stuff. But you can still see that they're projecting strong retail growth over the next couple of years. Pretty good non-farm employment. which is up 4% in 22, and they're looking at 2 to 3% growth over the next several years, which when you compare that to states like New York or California, Oregon, and Washington, those states are actually shrinking. And so when you look at, the fact that we keep coming back to this on all of these webinars, we could really seriously be headed into a recession. And if we are, states like this will continue to grow. They will continue to add numbers. States like New York and California will continue to shed people as employment tends to get scarce, cost of living continues to escalate, and those kind of things. So 1.5% or 1.7%, 1.5 to 1.3% is the projected annual growth. And that is fairly substantial. And with that, you're going to be able to build businesses. You're going to be able to see how you can sustain businesses, because those are very positive numbers. Here's another shocking one. They pulled 60,000 building permits for whether that's apartments or houses, but it is residential only, right? 60,000 building permits in 2022. However, they are saying that is down 6% from 2021. They're also saying that they're going to pull about 43,000 for 2023, which is down 28% from the year prior. And when you really look at the historical data on this, they were pulling about 40,000 permits annually prior to COVID. They shot through the roof when people started to really consider where they wanted to live versus where they had been living. And that's where you see a lot of that economic data changing. But you're still talking about 45,000 building permits being pulled in the Phoenix MSA on an annual basis, which is still, that's really strong. So here we go. Here's our charts, right? All the way through the 60s, we were less than 500,000 people. In fact, it looks like in the 60s, we finally crossed the 500,000 people in the Phoenix, Arizona area. But since then, we've grown to 1.6 in Phoenix proper. It is only a landmass of 517 square miles. So it's got 3,198 people per square mile, which is a pretty dense population. A lot of that being said, usually when you see dense populations like that, you've got good commuter traffic, you've got good infrastructure, you've got good bus systems, you've got a lot of things in there that are very user friendly. So you're not dealing with something where, it's expensive because you got to have 2 cars and everything like that. For a 2-person household, a lot of times you can get by with 1 in public transportation. It is ranked number 1 in states as far as growth. It's growing at 2.4%, almost 2.5% on an annual growth rate Phoenix is ranked number 1 in the state, and the state is ranked number 5 in the nation. So the current population of Phoenix is 1.6, like we've talked about, and that's based off the latest census or the latest data, but the census had it at 1.611. So again, starting to attract a lot of people. And as you can kind of see, this growth rate is starting to really get up there, but it doesn't show any signs of easing like we're seeing in some of the other red states. So some quick statistics: 579,000 households, average median income of 64,000. So not at the bottom of the list, but not at the top. The median gross rents is $1,175, and the median cost of housing is $277,000 per unit. That includes everything from trailer parks to mansions, all rolled into that. But here's another fun fact: is they have 56% of owner-occupied homes, which is a very high number compared to a lot of places, because, and I think a lot of this has to do with retirees. We didn't break that segment down by age group, but it definitely has to do with the stage in life that a lot of people are at. Very good numbers on high school, but not great numbers if you guys watched our one on Raleigh, Durham, 2 weeks ago. Not great numbers as far as bachelor degrees. So we have a worker population. We do not really have a white collar population here. It's more of a blue collar town, and the $64,000 annual income tells us that. You know, another fun fact is if you take the $64,000, $64,000, I'm doing quick math here as we go along. You divide that by 3, that's going to be $21,000 a year. Divide that by 12. The thing is, here's the thing that I look at. Most landlords will allow 33 to 35% of your income to go toward housing. That's just kind of a normal average. If you're getting a FHA loan, FHA will not allow more than 36% of your combined income per household to go toward your debt, right? Whether that's credit cards, car payments, those kinds of things. So if we take that 64,000, rents in the area can be as high as 1775 and still be okay with where things are at cost-wise in that MSA. So that tells me if the median gross rents are 1175, we've got a lot of older product, but we have a population that can and likely will spend more on rents. So for me, this looks like a fairly strong opportunity to look at how could I build in the area and be able to build effectively and get to that 1775 for rents. The other thing that I know is that in our markets, 1775 will allow you to build about a $325,000 unit, probably down to about 260, 270 now, based on where interest rates are at. And as you saw with the last slide, we're talking about a median cost of housing of 275. So good numbers. They seem to check out initially on first blush. So why are people moving here? Well, they're moving here because there's 10 Fortune 500 companies here. Average temperature year round is 75 degrees. Now, to be completely honest, I think today it's going to be like 113. No kidding, 113. So that average is definitely an average, but the other side of that is, as they tell us, it's a dry heat, so it doesn't feel that hot. But it's got an affordable cost of living for renters as well, which is important in a marketplace. And to see as much discrepancy, or to see really, it looks to be about a 28% of household income is going to rent, means that there is a fairly equalized supply of housing. It's not necessarily a shortage, but it's got world-class education, multiple universities, some of the best medical facilities, the Mayo Clinic is there, several things like that. Lots of food, art, and nightlife that comes with the higher income of the older generation and what they're expecting in their communities. And then amazing outdoors, hiking, biking, golf, and obviously the egg on the sidewalk frying contest. So getting to Phoenix is pretty easy to access. It's dubbed the friendliest airport in the U.S. It averages 45,000 passengers per year and over 800 employees. Southwest and American both have hubs there. That means that they fly out of there direct to a lot of places. I know Phoenix to Dallas, Phoenix to, they even have a Phoenix to Raleigh, Durham flight. They've got a lot of outreach there, so you can get straight to anywhere. And then everybody's low-cost airline that includes everything, Southwest, also does it. 418,000 flights annually out of the Phoenix airport for a total economic impact of $38 billion. That's a lot of money coming in traffic, guys. That is substantial. And that is also why, areas like Denver are popular. Areas like Salt Lake are popular because they are a hub. Denver is a hub for United, and Salt Lake City is a hub for Delta. And the fact that those are both very well handled airports, this one has 2 Southwest and American Airlines that hub out of there. So really good stuff. Tourism is a big part of the income, raising 16 billion annually. So it's half the size of the of the amount of funds being brought in by the air traffic that comes in, but it's also brings you a lot of people that are coming to explore, spend more money than they normally would because they're on vacation. And that is always a great idea for sustaining economies, because the ancillary jobs that are brought on with a lot of these other things, with the other businesses, you're creating shop space, you're creating tourist destinations, things like that. The other thing that I think you should look at is when you're talking about Phoenix and you're talking about their tourism, there are 3 months in Phoenix, January or July, June, July, and August that are absolutely almost inhospitable. And there's not a lot of tourism going on. There's not a lot of hiking and biking. 185 golf course within a short drive, host to the Phoenix Open. But at the same time, you're talking about somewhere that come this time of year, nobody's out golfing past noon. It's just too hot. So to be able to pull in those kind of numbers that we're looking at there on the screen, in $16 billion in a let's call it a 9-month window, you're definitely in a great place. So, and so it looks like some of you guys have had trouble logging in. Welcome. We're seeing you guys come in. Sorry about any technical difficulties. I can tell you for sure that I didn't do it because they don't let me do anything close to that. It would be an absolute disaster if I did it. But professional sports teams, they've got one of only 13 cities to have 4 major league teams. Together, they have a combined annual revenue of $786 million and almost 2,000 full-time jobs. So Arizona Cardinals, looks like the Timberwolves, the Phoenix Suns, I recognize, and then the hockey guys. I don't know. Arizona is ranked as 4th in the best states of doing business by Chief Executive Magazine. That is a look at the combined value of everything. What are your property taxes? What are your business taxes? How hard is it to get things approved? What kind of legislative measures are in there that limit businesses and or promote businesses? Also, very basic things like what kind of economic development do they see? They've got a top tier education, an unbeatable quality of life. Having been there several times, my parents they winter out there. I got to tell you, Phoenix is a pretty happening place. There's a lot going on. There's always something. And in a city of 1.5 million people, you've definitely got a very, very wide variety, and a lot of ethnicities are there. And then when you start talking about the technology space that they're dragging in there, kicking and screaming, you're starting to see a lot more of the high paying jobs and people that are coming from larger cities and expecting those kinds of amenities. High access to technology and innovation. Toshiba's doing a multi-billion-dollar plant there. Amazon has lots of warehouse facilities there. It's also a right to work state. Right to work state means that they don't prefer unions. And so an employer has the right to terminate an employee at any time. And that makes it very difficult for unions to get a foothold. Unions can be good for businesses, but typically they are a higher cost of doing business, which is a higher overhead to those that are trying to run businesses. And it's not always a very attractive business model. The 3-pronged approach to attracting new business is attract, expand, and create. And they do have a very robust economic development organization that functions in and around the city to make sure that they're bringing in everything they can, because tax dollars are what makes cities work. Business taxes, property taxes. And when you have a lower tax rate, you need more taxable dollars, which means you need to promote it to more businesses. This is kind of a capitalistic approach that the cheaper we make it to do business here, the more people will come here and we will make it up on volume. That's something that you can do with taxes that you can't always do with golf clubs or other widgets that you're manufacturing. The manufacturing industry, speaking of, has grown at over 30%, which is 2x that of the rest of the United States. So very, very strong in that regard, which as that manufacturing continues to grow, it will push the other industries to become more sustainable with ancillary jobs, from your gas station attendants to car washes to accountants, tax advisors, chiropractors. All of those are considered ancillary to the individual driver, which is the tech industry at this point. And then in this case, a very, very strong second place is the manufacturing industry. So when we look at the low cost of doing business, it is below the national average of 8.4% per capita income going to taxes. Again, the national average, that is a combination of 50 states and landing right in the middle at 9.9. We know that California is over 16% in just their tax rate for the state, which, gosh, this is half of the tax burden that California puts on their citizens. And it is only about 3.5 hours from California to Phoenix. So government efficiency is really strong. The study ranked Arizona as the 9th in the nation for a government and fiscal policy, which results in a significantly lower cost of doing business. Lest we not forget, time is money, right? So if you're being able to do business efficiently and correctly and rapidly, you're going to be in a position to get your products to market and get your profits made faster, and you're going to see your ROIs continue to increase. Best College University of Phoenix has over 250,000 students enrolled. Grand Canyon University at 100 and Arizona State at 77. So University of Phoenix, the good news about University of Phoenix is it's online. So you're not seeing 252,000 people show up in town trying to find room and board and housing. Individual tax burdens, 7.62%, which puts it about the middle of the pack. 2.5% income tax. That's really attractive. Idaho is at 6%, and that's, well, gosh, they're more than half of what we are. Property tax is 5 to 11. Sales tax is 5.6. Again, lower than Idaho, lower than a lot of states. With New York, Hawaii, Maine, Vermont topping out at the top of the list. In fact, I'm really surprised that Hawaii, Maine, Vermont, Minnesota, New Jersey, Connecticut, and Rhode Island are all ahead of California for a combined tax rate. So corporate income tax of 4.9% makes it a great place to do business. Individual property taxes. Okay, guys, we got New York. Highest property tax is $8,600 for the same place. Same value in Arizona would be $1,600. Only thing that's cheaper than that on a large scale is Charlotte. Let's see. Sorry, Birmingham, Alabama at $900. So very, very big difference. San Jose, California is at $7,400, but that's substantial, right? And that all comes back to a cost of doing business, because if your employees and middle management have to pay those kinds of property taxes, they've got to extract that from their employer, who's got to turn around and extract that from their customers. So job creation in the area. Waste management's got a big outfit there. Bank of America, Humana. You can see that. Regional comparisons, 956,000 jobs in Phoenix. Tempe's got 213. Scottsdale's got 300, but Scottsdale and Phoenix are connected. So you really have 1.25 million jobs. And the next closest thing is Tempe. That's a ways out. So by far the largest city, the largest employer in the area, and not a lot of competition for that. When we look at key occupations, general and operational managers are $100,000 a year. Office and clerical is at $38,000 a year. So they definitely run the gamut here. You know, you've got still some people in the office and clerical at $15 an hour, while you've got general and operational managers that continue to climb as the tech market continues to boom. 52 hospitals in the area. Again, the aging population, they demand good health care. They go where there's good health care. And their 2022 revenues for that with their 50,000 employees for just Banner Health was 7.8 billion, and it became the largest employer in the state. So they're saying that that Phoenix is becoming the new Silicon Valley. And I do know that it takes silica sand to make glass, and it's hot enough there to do that. We're looking at three core reasons. One is the place, where the higher standard and the cost of living is less, the budding and flourishing pool of talent that's showing up there, and the lower cost of doing business. So when we look at the average space for Phoenix office rent is $25.75 a foot. Scottsdale and Tempe are at 27. Seattle averages over $100 a foot. That is crazy. Hopefully that's got a big view of the Puget Sound in order to pay that kind of rent. Costs less money, about half the cost of living in San Francisco. And the average tech salary is about a little bit better than half of what it is in Silicon Valley. So 60% of the difference when Silicon Valley and about 50% when compared to San Francisco. So for tech positions, it's about 60% difference when coming from the real Silicon Valley and about 50% when we're comparing it to San Francisco. So wages are comparable. Cost of living is definitely less expensive. Here's another good thing. I've been talking this whole time about the aging population and the people that are involved in it that way. But the real thing is, if you look at 22% of the population is a millennial generation, and almost 30% of the 4.6 million inhabitants hold a bachelor's degree, which is it's not a great percentage, but it's a climbing percentage. Employers in the area, we can see Banner Health has got 50,000. Republic Services, those guys pick up your trash. They're a nationwide outfit. ON Semiconductors, there are reliability test engineers. They're doing very well. Sprouts Farmers Markets, on and on down the list. This is another good thing. The city of Phoenix is on the list, but it's substantially less than the top 5, as far as less than half of what the top 5 are for their average employment numbers. So you've got some really strong numbers as far as not being government workers and being real producers in an economy. Republic Services just built a new 240,000 square foot sustainable workspace for their company headquarters there. Move Technologies celebrated its grand opening in June, and their new headquarters will support 180 new jobs. It's the world's largest, fastest growing marketplace for used semiconductor equipment. Didn't know that was a thing. I learned something new on this slideshow, guys. It's taken down 32,000 square feet. Rehiring Pacific breaks ground on a manufacturing facility that will bring another 100 jobs to Buckeye, Arizona. That's about 35 miles outside of Phoenix. Here's a bunch of other great companies that are headquartered there. Knight Transportation, U-Haul, Pinnacle West. Greater Phoenix is close to many major markets. By truck, it's 5.5 hours to San Diego. San Diego is on the California southern coast. 4.5 hours to Las Vegas, and 3.5 hours from Mexico. So it is definitely centrally located for people bringing goods and services into the area. Phoenix is the #2 growth market for large warehouse leasing spaces. And this is those facilities over 200,000 square feet or larger, and that hit its highs in 21. And the industrial warehouse space recorded 450 million square feet of transactions in the total 23 Northwest or North American markets. which is up significantly for 350 million in 2020. But when you look at that, Houston is number one, reason why we invested in warehouse in Houston. Phoenix is number two, and they are clearly out in front of Central Valley, California, Columbus, Ohio, and Atlanta and Louisville, all coming in the sevens, 7%, where these guys, Phoenix is almost 11 and Houston is over 11. Industrial market trends. There's 58 million square feet in the pipeline. Now, if you're looking at those Amazon million square foot buildings, that could only be 50 buildings. It could be a lot more than that, just depending on the size. But it reported 4.5 million square feet of industrial space delivered in the first quarter, and another 53 million under construction or in the development pipeline, making it the second largest national industrial pipeline in the nation. So, vacancy rate of 4%. Despite unprecedented development activity, it's still in the fours. That's crazy. That means that there is a lot going on, and the rents are less than national average. The average rent is 96 cents a square foot for industrial, and you are looking at a 4% increase over the fourth quarter of 22. So no drop in rents. In fact, an increase in rents because of the 3.9% vacancy. Industrial forecast. The deliveries reached an all-time high in 22, expanding the market inventory by almost 10%. Guys, that is nuts. That is a huge amount of expansion going on, and a record 56 million square feet is currently underway. So you're talking a robust demand coupled with low vacancies. Your asking rent is 98 cents a foot, and that is continuing to climb. And you're doing that on costs of $166 a foot on sales. So what your construction costs are even less than your sales price, because there's typically commissions, other fees, and then you're blending in the older product with the newer product. So the Phoenix industrial market has gained tremendous momentum and is continuing to be one of the top performing markets in the nation. So we really like that. And we think that Phoenix has a really bright outlook for warehousing and trucking. So we are thinking that the industrial market's inventory will expand by 12% by year end, when a majority of the current projects are set to deliver. So year end is going to be the telltale sign. As always, you're going to probably see all that 58,000 square feet come online, or 58 million square feet come online around the same time. Supply is going to explode. Demand is going to stay the same, and you're going to see rates readjust. So a lot going on there in the industrial space. Phoenix is number 2 in multifamily sales volume in the last 12 months. It was a very hot market. I know a dozen people in my business that have bought or sold in that area for $9 billion in retail multifamily sales. So that's a lot of stuff. That doesn't count a lot of the off-market transactions that were happening anyway. The only market that is more robust than that is Atlanta, Georgia, and only by about $200 million. Now, $200 million sounds like a lot of money when you're talking about the lottery, but it's not a lot of money when you're talking about apartment complexes, where an apartment complex may sell for 50 million. So you're talking 3 or 4 apartment sales different in that area. It's got market stability during the first quarter. After weakening in the second half of last year, the local vacancy rate remains unchanged at 6.4%. That's a 160 basis point bump over last year, and the average asking rent is $16.14. Okay, so when we look at what that is for apartments versus housing, we can see that they are definitely a little bit higher for that. And there has been 37,000 apartments under construction currently, with 2,500 units just being delivered in the last month. The pace of net renter move-ins pickup has picked up in recent months. I would think that with the temperatures where they're at, being the middle of the summer, you would actually see all of that activity decline a little bit, but they're still saying that they're staying at the 6.4%. Current rents are slightly lower than a year ago, which would fit with the market, but they've not dropped off like some of the larger markets in New York and California. And they still have a competitive impact of new supply because there's such a large amount of older stuff in the area. Renters are migrating to Sunbelt states, causing supply to go down and rent prices to go up steadily. If you look at the inflow, it is definitely not in the, it is definitely in the 50,000 or more category. It's also, you can see where Tennessee, North Carolina, South Carolina, Florida, and Texas are all in there doing their thing on that growing population of markets that are doing over, they're having more than 50,000 people move in on an annualized basis for the tenant market. So when you go back up here, we're looking at, let's see, where did we see that? I don't think we've gotten to that yet. Sorry. When you see that they are delivering thousands of units, you can also see that they need thousands more because they have 50,000 inbound tenants every year. The competitive impact on supply and demand is definitely been minimized during the first 3 months of this year, but it's expected to play a larger role in fundamentals. And so when you have a limited supply of new, that's right here. So they delivered 2,500 units. That's going to say you're going to take out, let's just call it 7,000 tenants. You got 2 and 3 in a unit. Sometimes you got 7,000 of the inbound 50 in the quarter. So if you've got 12,000 people moving to town and 2,500 units being delivered, you're still going to wind up short. That's going to eat into this vacancy rate very, very rapidly. So Phoenix multifamily market also saw sales volumes of nearly 10 billion year over year, with sales reaching 9.3 billion. And the average price per unit sold in Arizona was $212,000 a door. That's spectacular. I know of people that were buying them in the 120s and 130s 2 years ago. To see that creep up that much is pretty substantial. They have $76 billion worth of multifamily assets, and 12% of the inventory is exchanged on an annualized basis. So there's 335,000 apartments in Phoenix for a population of 5 million, with 56% of those being homeowners on the 5 million. That leaves a lot of room for more to be built. And they're showing, by the multifamily numbers, they're showing a median household income of about $75,000, which again supports about a $2,300 monthly payment. And the household income growth has been 7.7%, which is very, very robust, but you're still seeing market cap rates hold in the 4s. So all of those things speak to constraint, and constraint drives pricing. Driven pricing creates more opportunity for upside, more opportunity for gain. So as we conclude this in about 42 minutes, that was a lot of data to go through, and I appreciate you guys bearing with me. We'll get to questions here very shortly. But there's a huge growth going on. Their tech is thriving, lower taxes, great real estate market, consistent tourism, large need for multifamily, and big businesses moving in there as well. Guys, I got to tell you, Phoenix has definitely been on my radar for a while, but after this presentation, I can see where it will stay on my radar, because it is a fantastic market. So guys, if you like this, you can find out more about the next one we're doing. We're going to do San Antonio in 2 weeks. We're going to look into that market. That market is pretty robust as well. Great market. You can sign up by clicking on the QR code and get signed up that way. But it will also help you stay in tune with where the hot markets are in the U.S. and give you better market insight. Guys, if you like that, go to shannonrobnett.com where you can get access to this. You can connect with us. We can answer any questions you might have about your investment journey and look at how we can be of assistance to you moving forward. And then with that, guys, I want to open it up to questions if anybody's got questions or concerns. Also, Isaac has dropped the link to the webinar for the San Antonio one, so you guys can get signed up now for that. And then we will be sending replays out to you here very soon. Give us a day or two to get them edited up and tuned up. And then those will be going out. So with that, guys, I wanted to open it up. If anybody's got questions or thoughts or concerns or even personal insights on the Phoenix market, I'd love to hear from you. You guys just put your question in the chat or the Q&A section. We'll get right to that and answer those. But I wanted to tell you guys, I appreciate you guys coming. There's quite a few of you here today that I haven't recognized your name, but I'd love the opportunity to connect with you. If you've got, if you want to connect, Christy's going to drop the link to my Calendly in there so that you guys can schedule a 15-minute call. We can talk about this market. We can talk about Raleigh-Durham. We can talk about what you're doing in your markets, what kind of investing you're doing, and how you see these kinds of presentations helping you guys in what you're doing. So I'm not seeing any questions in the chat. I want to thank you guys for coming. And again, there's the link to my Calendly. Isaac threw it in there. He beat Christy. So as you can see, we've got a little friendly competition going on here in the office. But want to thank you guys for coming. We will be sending out those webinars to you. And hope you guys have a great rest of your day. We'll talk to you all soon.